Brian Hicks of Angel Publishing claims he knows a stock beating Nvidia 10 to 1 in 2025 and that 99% of investors are missing it. I reveal this stock in this video and analyze it for you for free. Just keep in mind no paid or proprietary info is given away in this video. It's all guesswork based on the clues in the presentation. Brian doesn't really have many stock picks to analyze from the past, so we'll just jump right into the presentation and try to figure out the stock. According to Hicks, this Nvidia crushing stock is not AI, quantum computing, or crypto. Hicks reveals the kind of stocks he's talking about, and it's gold stocks. He reveals that certain gold stocks, like Anglo Gold Ashanti, are outpacing Nvidia 10 to 1, and shares a graph of gold stocks crushing the Magnificent 7 stocks. And according to Hicks, this is just the beginning of gold stocks. Hicks claims gold is becoming the backbone of the new financial system. Hicks so bullish on gold because he says tokenization is unlocking trillions in untapped gold reserves. Thanks to blockchain technology, gold is now tradable before it's even mined, turning it into a new liquid asset class. Additionally, he says, gold-backed digital assets are gaining traction. JP Morgan, Citibank, and the London Bullion Market Association have already launched tokenized gold projects. And lastly, Hicks claims gold is powering next-gen technology. From quantum computing breakthroughs to aerospace innovation, gold is no longer just a store of value. It's fueling the industries of tomorrow. Hicks claims the smart money is pouring into gold too. He continues saying, central banks are stockpiling gold at record levels, buying over 1,000 metric tons for the third consecutive year. And he says, mining companies are scrambling to increase production as demand skyrockets, hitting a record $382 billion last year. Hicks claims this sector is still very undervalued and claims the entire gold mining sector is still smaller than a single tech stock. Hicks doesn't leave too many clues about what he's pitching, but he does say this. Most investors don't know where to start with gold stocks. That's why we're revealing our top pick, an ETF that holds both the world's biggest gold miners and explosive junior miners poised for hypergrowth. This ETF is already one of the best performing funds in the market, yet it's still flying under the radar, and it's poised to skyrocket big this year as the gold bull market goes parabolic. I'm going to reveal my guess for the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out Alpha Picks. I reviewed over 100 stock picking services, and Alpha Picks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off Alpha Picks. So go ahead and click that link and take advantage of this amazing deal. This is mainly a guess, but I think the ETF Hicks is pushing here is VanEck Junior Gold Miners ETF. This ETF is up 40% in the last year and is up around 10% year to date, while Nvidia is down. The VanEck Junior Gold Miners ETF, ticker GDXJ, is an exchange-traded fund that focuses on small to mid-cap companies involved in gold and precious metals mining. It seeks to track the performance of the MVIS Global Junior Gold Miners Index, which includes mining firms that generate at least 50% of their revenue from gold or silver mining. GDXJ is popular among investors looking for exposure to the high-growth potential of junior gold miners, which tend to be more volatile than larger, established mining companies. Due to its focus on smaller firms, the ETF is often considered a higher risk, higher reward investment, with significant sensitivity to gold price fluctuations. It provides global diversification by including companies from various regions such as Canada, Australia, and the United States. Here's everything you need to know about this stock, and after I'll tell you if I'd buy. First is high risk, high reward, the junior miner roller coaster. This ETF focuses on smaller junior gold mining companies, which can skyrocket if they strike gold, literally, but they're also riskier because many are still in the exploration phase and might not turn a profit. Second is gold price sensitivity. It's a leverage play. GDXJ tends to amplify gold price movements. When gold surges, these stocks often climb even higher. But if gold tanks, brace yourself for a steeper drop than the metal itself. Third is volatility alert. Buckle up for a wild ride. This isn't your grandma's safe stock. Junior miners are notoriously volatile, so expect big swings that could test your nerves and your portfolio. Fourth is diversification done right. Global exposure in one ticker. With one trade, you're getting a basket of small-cap gold miners from around the world, spreading your risk across dozens of companies instead of betting on just one. Fifth is expense ratio reality. It's not free money. The ETF charges a 0.52% expense ratio, pretty reasonable for a specialized fund, but it's still a cost that nibbles at your returns over time. Sixth is liquidity bonus. Trade it like a champ. GDXJ is highly liquid with tight spreads and heavy trading volume, so you can jump in or out without getting stuck. Perfect for active traders. Seventh is inflation hedge potential. Gold's secret weapon. Historically, gold miners shine during inflation or market chaos, so this could be your portfolio's shield when the economy gets dicey. Just don't expect guaranteed wins. So would I buy? Well, gold prices have experienced a significant surge, reaching nearly $2,900 per ounce, a 42% increase over the past year, outperforming the S&P 500 index. This rise is driven by central banks diversifying their reserves and increased retail demand. Despite this, gold mining stocks, including those in the GDXJ, have lagged behind the physical metals performance, presenting a potential value opportunity. Analysts have raised earnings forecasts for these companies, suggesting room for stock price appreciation. Additionally, the GDXJ holds buy signals from both short and long-term moving averages, indicating a positive forecast for the ETF. Also, according to Seeking Alpha, which is my favorite stock research tool and which you can try free for 7 days by clicking the link in the description, this ETF is rated a strong buy based on the quants at Seeking Alpha and a buy by analysts at Seeking Alpha. Add all this together, and I think this ETF is a buy. It's going to be volatile, but it seems like gold is a good bet right now, especially since economic outlooks are so unclear. And make sure to click the link in the description to check out Alpha Picks. This is the best stock picking service, and clicking the link saves you $50 on this awesome service. So go ahead and check out Alpha Picks now and put yourself in the best position to win with stocks.